Thanks so much, Morgan. Yes, we are pleased to bring in San Francisco Fed President Mary Daly. President Daly, thank you so much for joining us.
My complete pleasure. Thank you.
Well, great. Let's start off with this issue of inflation versus employment and where you stand on the conflict or the contrast or the tension between both sides of the mandate, given the tariffs that are coming and what you have seen in the employment data.
So right now I see that things are in pretty good balance. We have inflation continuing to come down and the labor market remains solid. We're watching both sides of that information, of course, but so far the economy remains in a good place and policy's in a good place. If you think about what could happen on inflation, there has been quite a number of concerns that the tariffs will push up inflation. But every day we get additional news that so far they're not seeing that the tariffs are coming down, that indeed the announced tariff rates are coming down. And then indeed what's happening is that firms are finding ways to mitigate some of the impact on consumers. So we still have to watch and make sure that we don't see it in inflation. And my eyes are on that. But I don't think the concerns are as large as they were when the tariffs were first announced.
Well, give me your read then on the May inflation data. Did you feel like you were out of the woods, stepping out of the woods, in something of a clearing in the middle of the woods? I know you like to hike, so give us your sense of where we were from the May data, and then kind of a sense of, well, where you be hiking this summer?
Okay, that's a great question, and I do like hiking. So the May data just confirmed an ongoing pattern that in the services and other sectors we saw, housing in particular, we saw inflation continue to come down. This is great news, both for our inflation mandate, but also for American families. So this is really good news. In fact, the fundamentals of the economy, the ones that are absent looking forward to the impact the tariffs might have, are really good. We would be considering, in my judgment, starting to normalize the interest rate with the labor market slowing and inflation coming down gradually. Of course, what we saw last month is not a predictor of what we'll see in coming months, just because we do have the tariffs and we do have immigration policy. We do have, tax policy and deregulation, all of which can have some type of an effect on the economy and inflation. And so we have to continue to watch that going forward. Now, again, I said the predictions of what that might look like from models in history can be pretty dire in terms of how much it will contribute to inflation. But there's also many things that can happen, leakages, wedges that get in between what is the published effective tariff rate and what actually passes through to consumers and households. So there's just more to watch, but we cannot wait so long that we forget that the fundamentals of the economy are moving in a direction where an interest rate adjustment might be necessary.
Do you see a meaningful, and I want to pick up on that in just a second, but do you see, as the chair put it, a meaningful increase to inflation coming in the summer months? Steve, it's a great question, and it's certainly a possibility. So I see three possible scenarios as really driving the landscape of what we need to look at. One is that this has just been a delayed effect, that we're going to get a meaningful increase in inflation. And then the question there, is it going to be persistent and we really have to lean against it, or is it going to be a one-time event that, we can look through? But the third possibility is really that, perhaps it won't have the big impact on inflation that that models in history would tell us, and that it will be less response or less impactful on inflation. For that, we're just going to have to wait and see and collect more information. There's a lot of information we'll be able to collect to make those decisions. And, we spend a lot of time talking to CEOs of businesses across the country, the Reserve Bank presidents. That's one of the features of Reserve Banks, is we're out all the time. When I talked to CEOs just today, I heard a little more optimism, cautious optimism, of course, but a little more optimism of just what will eventually be the tariffs they have to pay, and then eventually what they'll be able to not have to pass on to consumers. So could a July rate cut be on the table for you, President Daly?
I think we want to be thoughtful enough to collect the information, and we do have these three scenarios that could unfold. So for me, I look more to the fall. And by then, we'll have quite a bit more information. And businesses are telling me that's when they're going to look to for some resolution to some of the uncertainty. So I think unless we saw a faltering in the labor market that was meaningful and we thought it would be persistent, then I would say the fall looks more appropriate to me.
Mary, great to have you here on Overtime. You were mentioning immigration. I'm wondering, are you yet seeing any impact of immigration policy on labor availability, on wages? And if not, where and when would you expect that to show up in the data?
We really haven't seen an impact on wages. Wage growth is coming in line with our long-run values of inflation and productivity growth. And we do hear of pockets where there have been some disruptions to the ability to get labor. I think this is something that's reported nationally as well on, maybe hotels or other entertainment venues. But right now, we haven't seen a broad impact, and that's so far. You might continue to see it, but what's happening at the same time that some of this immigration policy is taking place is that job growth is slowing, and so we don't have a lot of mismatch there. The unemployment rate remains low, and people are finding jobs that take a little more time to find them, but I don't hear of a lot of shortages. In fact, firms are telling me that they have an easier time finding workers today than they did just last year.
So if we stick with labor, Mary, and it's great to see you, it's Morgan, how about the impact of AI, which I know you're studying and you are interacting with the technology? We know Fed Chair Powell earlier this week said it's too soon to tell, but how are you gaming that out?
Absolutely. It's a good question, and we do study it, as you know. And what we're hearing, we talked to a lot of CEOs about this. We have regular roundtables, and what they tell us is they are using it. Well, it went from something that seemed like it might work to something that's really affecting how they think about implementing it in their businesses. But again and again, they repeat to us that this is not a way to reduce their payrolls as much as is the way to augment their payrolls. They had a really tough time finding workers, and they want to make sure that those workers can do very productive things. And so they're trying to take less productive activities off, things that they can do easily with AI and don't present any risk to their profitability or their reputation. So we're not hearing of job losses yet, but certainly a wait-and-see approach is a good thing. We've had history of technology where specific people or sectors are affected, but I always remind people there hasn't been a technology in the history of technologies that has reduced net employment overall.
President Daly, I just have a couple more questions for you. Do you feel confident enough in some of the theories that are out there about the idea that, well, a tariff is a tax and a tax you ought to look through, and you could go ahead and cut rates even while inflation is higher because you're confident enough in the theory that tariffs will pass through and not create a broader inflation issue?
Steve, I've done this job long enough and I've been economist long enough that I never trust just the theory. There's really three things you have to look at. The theory helps us. History also helps us. And then you have to talk to people. People live in the economy, and businesses are really sophisticated at knowing when they can pass things through, when they can't. Consumers will tell you, am I going to pay that or not? Right now, I think there's a lot to be said for it can be one-time thing, and you put the tariffs on, they find workarounds, they move on, and we don't have a persistent inflation growth. But I think that we just can't call that for sure, and I wouldn't be preemptive. I really look to balance the two goals we have, which is inflation, bringing it gradually down to 2%, and the labor market, and both are at the top of my mind.
President Daly, you've been a fan of using the phrase, which is also used by the Fed chair, of policy being in a good place. But I'll just give you my observation that it sounded to me like you're maybe a little less certain when it comes to the employment side of the mandate that the policy is in a good place. Could you just put some detail on that for us?
Well, I'm definitely not uncertain that policy is in a good place today, even with the labor market considerations I've raised. What I'm saying is that if you ask me where we are in the labor market, I would say we're at a point where additional softening could easily turn into weakening, which I don't want to see. And we can't allow for that to happen because we're waiting for inflation to pop up just around the corner. Central banks are very good at fighting the last war. The last war was we missed on inflation because we said it was transitory. I don't want us to lose on this one because we think it's coming, but it doesn't come.